Welcome to this week's Nebraska Soybean Board Weekly Market Roundup. It's being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We're going to take an interesting turn today as we talk about these markets. We know it's had some interesting trade this week, especially when we all were excited about 620 corn back on Monday, and look where we're finishing out or coming to on a Friday. We're also going to talk about what's happening in energy prices and urea as well. And admit it, some of you may still have old crop still in the bins. We're going to talk about what you should be doing with that old and as you focus on the new.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
I bring in both PJ Conradt and John Pfanner. They are with Tredas. And gentlemen, thanks for joining me today. And I'm kind of excited to take this trek. I want to jump into energy prices, I think, first and foremost, because I got cornered at the gas station from a gentleman saying he's really nervous about natural gas prices if things really heighten between Russia and Ukraine. And that's something we don't think about, natural gas a lot of times and the farming operation. So we'll start out, John, kind of give me your thoughts. What are you hearing? What are the focus on for these producers?
As far as, energy costs go, one thing I feel like is interesting, as everything's going up, one thing that I do keep an eye on probably closer than anything is diesel fuel, ULSD, and that's obviously up significantly here in the past several months. But what I have noticed is at the pumps, though, gasoline and some things, at least here in Alabama, and I've noticed in Missouri, the prices actually come down. So they're I don't know what that is. That's just kind of anecdotal that I noticed. But as far as energy costs in general, that will be a concern going forward. Especially if they continue to go higher this fall. A lot of corn dryers are ran by natural gas, and then also, just the cost of fuel is actually fairly minimal in your total input cost. But it's obviously real when everything else is getting squeezed. Those couple dollars an acre, $3, $4, $5 an acre, do tend to add up. So it will cause some issues, but I don't know from the diesel fuel side, not so much. But natural gas and everything, that's going to be a concern. And it's hard for me to forecast out that far. How that would affect drying costs or anything.
Yeah. Well, same to what John said. I agree. It's almost impossible to forecast out that far. And I'd be curious too. I'm no natural gas expert. Just looking at the chart, we've obviously had like a blow off top here. We've came back to earth a little bit, but significantly higher prices than what we were, say, 2-3 weeks ago. What does that all mean? I guess in my head, is it because of the cold snap coming to the northeast and the storm, or is it Ukraine Russia driven? And if I guess we go down the path of Ukraine Russia driven, do we actually go to war over there? And I think that really is that something that the kind of mainstream media is really getting excited about, but you internally maybe can catch some things online that are saying over there they're not near as concerned about it. Who knows? The truth probably lies somewhere in the middle, but that also correlates straight to grain trade and wheat and corn as well.
So do you find that as a surprise, or maybe not a surprise, that the markets are starting to react to all these rumors that are floating around?
I don't think it's a surprise. I mean, it's been in the news here now for 2 weeks. Anytime you get a U.S. president to say we could potentially bring troops or position troops on the border, you're going to add some premium to the market. In the event we actually were to go to war, it would seem very crazy to me to think we're going to go to a hand-to-hand combat and join Ukraine, where they're not a NATO country. But I'm also not Joe Biden. I'm also not getting the info. But I had the conversation today with somebody. I said, I'd love to be a fly on the wall to listen to him and Putin talk back and forth. I wonder if it's just a hello, how's your coffee this morning? Send me some vodka. Let's keep it moving.
There you go. John, let's talk about this urea price. We're starting to see it come down. So some good news for guys that are out there dealing with fertilizer.
Yeah, of course, everybody, has kind of had a pinch point or an anxiety point, with high cost of nitrogen. But in areas where, anhydrous is prevalent and guys that weren't able to get it on this fall, when a lot of guys were able to lock some in, in the summer, and when it was almost half the price of what it is today. And so now they're looking they've been looking at nitrogen costs, hoping, I guess, it would come down and kind of being in a little bit of a moment of indecision. But now you finally started to see the market work. And by that, I mean, anhydrous is high. Nobody's locking this in right now and haven't for quite some time now, probably 3 or 4 months. And now you're starting to see the cost of urea come down, and urea can obviously be an alternative. And I've had a lot of my clients in the Midwest actually mention that, possibly reducing their usage of anhydrous ammonia and going to top dressing urea later on, like maybe only putting on 100 units of anhydrous in the spring to get the crop going, and then coming back over the top with urea. So whatever plays out there, whether urea keeps going down and that comes to fruition, or just that threat of farmers doing that causes anhydrous to come down, one of those two is probably going to happen. And so it should be beneficial to the farmer on an input side, going forward, because we are starting to see the urea prices really come down versus any of the other nitrogen fertilizers.
Well, as we continue here at the Nebraska Soybean Board Weekly Market Roundup, brought to you by the Nebraska soybean farmers and their checkoff, let's go over to these higher market prices that we've seen. And, I remember Monday, which doesn't seem too long ago, 620 corn. And I tell you, social media was blowing up about it. And though when we're recording this, it has not settled yet, but still 633.5 on the nearby corn, nothing to blink at.
No, I mean, prices are great. And I think there's really a lot of questions this week have been, to your point, Susan, I got corn in the bin, et cetera, et cetera. What do I do? And the thing I've been telling people, there's no probably wrong decision, but you got to make a decision. And and John, I don't know what you've been talking to your clients about, but one thing I've been telling guys is let's get to a point that if it goes $1 higher, we're happy we got X percentage left. If it goes $1 lower, we're happy we sold what we did here, and we're not mad about this underlying it was 640 at one point. And same thing for new crop. If you want to lay off some risk, to me, your risk is more on the new crop probably than the old, just with the profit margins there. Like John just said, with fertilizer prices, input costs coming down, that could be a little bit different. But don't be afraid to step in front of this thing. And that's something we always talk about is you want to be proactively patient and get some stuff sold for 22. And if you can stay ahead of this thing, at some point we're going to crack back to 4, whether it be 2 or 3 years from now, I don't know. But stay ahead of it and keep your averages and keep your head where you can sleep at night too.
John, what about the soybean prices? I mean, they're seeing some nice double-digit gains.
Yeah, double-digit, triple-digit. If you go back to the 18th, I was looking at that. Soybeans they're kind of like a feral animal. They get a mind of their own, and sometimes it's best to stay out of the way. But if you got an old crop left, it's just like Phil said. We're risk managers, and so our advisement is going to be, what is your current exposure on like old crop, for example? What's your current exposure versus your production? So what is that? And are you going to be content and happy, if the market drops $1 or $2? So you got to always keep that in your mind. And then honestly, what most of my clients have been doing, and most of probably across Tredas, is they've just been making incremental sales of price targets as it's going higher. Now, eventually, like Phil said, at some point, this thing's going to fall off a cliff and start going the other way. So you just have to make sure that you've done something during this time so that you don't feel like you have all your eggs in one basket on your old crop, right? And that's just, again, comes down to prudent risk management. And then as far as the new crop goes, that's, the seasonal typically that we kind of go by is April through the end of August. And so if you still have old crop left, you could probably drag your feet on new crop right now, and as you're selling into this old crop market. But then you want to start thinking proactively about, what do I want to start doing about new crop? And the good thing is on soybeans, right, we haven't seen nearly the input cost increase on soybeans as we have on corn. So it's easier to make that decision on soybeans, even if it is an early decision by seasonal standards. It's still, it's very profitable right now at 13.50 futures. So, by all means, if you want to lock in a little percentage, because, at the end of the day, we're just trying to manage margin. We don't know where prices are going to be at, but right now we know what our inputs are, or at least some of us do. We know what we can sell our production at. There's the margin. Let's manage it.
PJ, what are you thinking?
I agree 100% on soybeans too. I mean, if you look at over a 10-year time frame, the yearly average on beans and the seasonal average on beans aren't dramatically different. You just got to be able to weather the storm through the ups and downs of soybeans, which obviously we can see is very violent. But I agree. I mean, at the end of the day, like I said, there's really no bad decisions to be made today from a financial aspect. So it's more, how are you mentally wrapping your head around that if it does go $1 or $2 higher? And to me, if you're profitable, you should be happy. No one knows where this is going. I think especially this year with prices where they're at and everything going on in the world, whether it be interest rates or we keep talking about inflation, fertilizer prices, Ukraine, Russia. I mean, it just seems like there's a laundry list of things we could talk about. We haven't even hyped the market up about China and Taiwan yet. So that's probably the next thing that's going to happen. So I don't actually know where this is going. But one thing I can say, and if you ever want to see the chart, we could just throw it up, is anytime you think the market in the last 24 months, give or take, have been pretty good and things have remained within a range that's profitable. If you go back to 2008, we had very good prices and we rallied to call it $8 on the 4th of July, and we were at $3.50 come November. So what keeps me up at night when guys are undersold? That's what it is. That's how you A, lose a lot of money, B, lose a lot of clients, and I'm not in the business of doing either of those. So.
All right, I got to ask them, because we've seen this craziness in the price. Let's put on the hat of that livestock producer. What are they thinking at this point, PJ?
It depends what you read. There's some people who think we're going to what, 180, $180. I don't know where we're headed. I do think you got to be kind of cattle have a longer tail, so to speak, than grains do. So if there's some culling of the herds happening up north and with all the dryness, could you see an influx of prices? Yes. That cattle on feed was very bearish last week, but the markets have reacted to that. And I think we're in a good spot, but know your break evens and know where you're at and know where you're, how do you protect risk? I don't know where we're going price wise, but you can stop moving parts of your business to make yourself profitable longer term. And
all right. Well, thanks both of you gentlemen for joining me with Tredas. Of course, PJ and John, thank you again. And as a reminder, folks, commodity futures and options do involve a substantial risk of loss, and they're not suitable to all investors. That's been this week's Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff.